historic morning. And of course, while we know that the pre-open rates have settled at 872 rupees a share at an 8% discount from the issue price of 949 rupees a share on NSE, we're still seeing opening levels sort of setting in. And of course, they are in the 800 band at the moment, but the final price is still not settled on NSE, so we will wait for that. But remember, this listing is testing the faith of millions of small investors. LIC has been synonymous with the insurance market in India, and despite stock market volatility and macro concerns, the LIC offer did successfully manage to sail out with better than expected subscription levels. However, remember, while this is a really historic day and moment for India, there are, of course, causes of concern. Some investors also hoping that LIC, gives them returns beyond a short period of investing. But of course, clearly seeing these levels come in at a discount. Remember, on day one, the key concern for many small investors who've been banking on this listing is the price point. So, of course, that concern remains, while some analysts feel that, look, this should not deter their, scope of thinking for the mid to long-term goals. And some investors feel that, look, they will need to be patient for wealth creation. Remember, on day one, the pricing really comes as a key point. And of course, for many small investors, many really hoping that this listing would have been a mega blockbuster, this does come at a disappointment. While it is amid volatility, amid global concerns, this does come as a disappointment on day one for many of them.
Always, thank you so much for breaking down the details for us. We will, of course, revert to you through the course of the day. But Life Insurance Corporation has listed on the BSE at 867.20 rupees per share, a discount of 8.62% or 81.8 rupees from its IPO allotment price of 949 rupees. On the NSE, the insurance behemoth's listing price was 872 rupees, indicating a discount of 8.11% from the issue price of 949 rupees per share. My colleague Priyanshi Sharma joins us with the latest update. Priyanshi, what can you share with us at the moment?
Well, Parmeshwar, it was a much anticipated IPO, and today it's a disappointment for many investors as the shares have listed on a discount, as we've mentioned the rates already. But market experts still say that this is a short term and this is just a listing rate, and for the coming few days, we would expect the shares to go with a discount because markets have already been volatile. Remember, markets have lost close to 6% of their value in just the last month, and that's because inflation is rising, rate hikes are rising. So LIC IPO really came in at a seemingly wrong time when the markets are really volatile. So that is why we're seeing that in the initial few days, the market, LIC IPO has listed at a discount. But in the long term, market experts say that LIC is a company with strong fundamentals. So investors shouldn't really worry at this point, shouldn't really worry with just the listing rates, but they should look at the company as a long-term investment, as the company is still India's largest insurer. But still there are concerns with this listing. Remember, before the market volatility, LIC was expected to list at a premium. It was even oversubscribed, and it was subscribed over 3 times, with policyholders and employees being the most enthusiastic about the IPO, and they oversubscribed the IPO with the most share. And on that day, we saw the LIC IPO being received very well. So we were expecting a good debut for the IPO on the markets. But it comes, as I said, at a time when markets are very volatile, and that is one of the reasons why the market sentiment overall is currently low, and that might be one of the reasons driving down the IPO. And in fact, we've also seen record foreign funds pull out from Indian markets. So both foreign funds and domestic funds are in a sense of doubts in the Indian markets, and that's prevailing across the market and across shares, and it's not just for LIC. So that might be driving the share down.
Right. Also, Priyanshi, give us a sense of what the pre-opening trade signals about the listing.
Well, we saw the pre-opening was also at a discount. We saw a 5-6% discount on pre-opening, but now we've also seen that the shares have listed, and that's also at a discount. So we could sense right before the listing, we could sense that the shares will be listed at a discount, and that's finally happened. And as I said, that's something that was being expected. That's something that was feared, that maybe LIC's IPO is coming at a wrong time, is coming coming at a time when the markets are already really volatile. Remember, it was supposed to list in the month of March in the last financial year. The government had been planning this IPO for a long time, but it was delayed due to Russia's war in Ukraine, and it was finally planned for now, and the government has diluted over 3% of its shares. So this IPO is really essential for the government as well. They've raised close to 21,000 crores from this IPO. It's crucial for the government's disinvestment targets. In fact, 21,000 makes up about 1/3 of the government's disinvestment targets for this year, and the government has been missing out on its targets for the last couple of years. So this was really crucial. But this listing also raises a question of whether the government's future plans of diluting more of its stake in LIC will be at question. The government has signaled, and it has openly said that this is just the starting. The 3.5% share is just the starting, and they will go on to dilute close to 25% of their share in LIC in the coming few years. So that's the plan. But today's listing raises a question on how prudent that plan could be for the future.
Right, Priyanshi, thank you so much for joining us with those details. To provide further clarity on the matter, we're also joined by Nasir Salim, Managing Partner at Flexi Capital, and Ambarish Baliga, a market expert. Welcome, gentlemen, on the broadcast. Nasir Salim, without wasting much time, I'm going to dive right in. Do you believe that long-term prospects of LIC are strong?
Stock and the institution, we track something called volume of new business, VNB margins. And I think, as far as the insurance industry is concerned, LIC continues still to have 65% market share. Now, obviously, there are certain structural changes expected, and those ones will start to happen. We'll start to, bake in better valuations, better numbers going forward. And, with a market share of 65%, embedded value today of 1.1 times FY22, increasing VNB margins, some structural changes that are expected to start to happen as far as LIC is concerned. It's going to be a very interesting bet as far as investors are concerned. The only challenge is, we keep saying this repeatedly on listing gains. I'm sure majority of investors understand this. They're not investing only for listing gains. It's a brand, it's a household name that is owned. People invest in LIC policies for minimum 5 to 10 years. I'm sure they'll invest, for at least 2 to 3 years in LIC as a stock, because, if you're investing in the product, I'm sure you have more belief in the institution that provides you the product or the manufacturer. So clearly, as far as the stock is concerned, the market participants are concerned, they should understand that equity has a lot of volatility in smaller time periods. But, with fundamentally good bets, with a medium to long-term horizon, LIC is going to be a game changer in some of their wealth creation journey.
Ambarish Baliga, do you agree with Nasir Salim that LIC is going to be a game changer?
It should be a game changer because, end of the day, that's the largest in the life insurance sector by a huge mark, because they have about 60% market share, whereas the next one has, I think, closer to 10. So the gap is huge. And today's listing, I think one good thing is that it's around the retail or the policyholder price. It has not come down below that. And we should remember that there are broadly 3 reasons for the stock to correct. For any stock to correct. So as far as LIC is concerned, if you look at valuation, that can't be the reason, because LIC was fairly priced. Now look at the market condition. Market condition has turned weak post the LIC IPO, so that could be one of the reasons. And the third reason is, could be a technical reason, because most of those who have applied, have got allotment. So most of the demand was satiated. So it's quite natural that there will be some sellers who may panic since it's listed below the issue price, so they could come in to sell. But clearly, I think LIC is a long-term investment, because insurance sector is, I think, one of the most exciting sector, and we should see an exponential growth going ahead. So it's a great long-term investment. If it comes down, I think it's a great pick for a long-term investor.
Right, but you do believe that current market volatility is likely to play the villain today on its listing day?
Absolutely. That's what is happening today because of the market conditions, because from the day the LIC IPO opened, the markets have corrected in a big way. So it's quite natural that it will get reflected in the opening price.
Right. Nasir Salim, Would you advise investors to hold LIC for the medium to long term?
Absolutely. I think, clearly, LIC, as I told you, is clearly, looking at some structural
Congratulations to the management, investors,
as well. I think, if you look at, I'll just give you some basic statistics here. If you look at some basic numbers, it becomes the 5th largest insurance company today in terms of, because of its listing. Globally, if you see some of the larger players, the likes of, all of these like MetLife, AIA, all of them have been trading at a 50% market share with a much lower embedded value. Embedded value, I'm repeating this number repeatedly, is basically a number which we track on future premium collections, and we discount that in terms of its earnings of an insurance company. It's a number that we use to track future earnings of insurance companies. Now, here's the number. At 65%, the embedded value is 1.1 times for this year, as against some of those which are sub 50% and trading at 1 times embedded value. So obviously, you can understand how much of catch-up the others have to do, or how much of value unlocking will happen also in terms of the LIC share. Number 2, I think the quickest point I'm trying to tell you here is, when I say VNB margin, basically every time LIC policy picks up a premium from its investors or its clients, they end up making $9 basically. Now, if you compare this to some of the private sector players in India currently, which are at like 10-15% market share, their VNB margins are much higher. I mean, their VNB margins are closer to 20%. So you can imagine now with value of new business, which is, for example, a higher, better product mix. Insurance, LIC does not do, market-linked plans, for example. Some of the private sector players do, market-linked plans. They do participating policies. So structural changes will also ensure that the price, and the valuation looks far more attractive, and pricing starts to catch up. And as I said, I think I agree with my co-panelist when he says, as far as the government of India is concerned, they've been very careful this time. It's been very reasonable in terms of price band. And this is all because of geopolitical pressures. I mean, there is a Russia-Ukraine crisis, there's an inflationary trend globally, as we're seeing. The markets are, choppy. They will continue to be volatile at least for the next 3 to 6 months. And therefore, investors should not look at this reason to deter or, as a deterrent to reach their financial goals and through good asset quality ownership.
Right. Just as I wrap, Ambarish Baliga, just want to ask you, there are concerns about LIC losing market share to private insurers, also questions about its profitability and revenue growth and its persistency ratio. What do you have to say on this?
When you had 100% market share and you have private players coming in, it's quite natural that you lose market share. But then we have seen that the growth has slowed down, no doubt, but then it's slowly catching up. And again, now with the IPO and being a publicly listed entity, I think the transparency levels will surely improve going ahead. And that's what I'm betting on. And number 2, I think LIC clearly is a household name. So I don't think even going ahead, there would be any problem selling their policies. So I think the growth will slowly catch up. May not really immediately, may not be in the next 2 years, but I think it will slowly catch up with the private players.
Right, gentlemen, thank you so much for providing your insight and for joining us on the broadcast this morning.